So now if I look at cost accounting, this is all about my manufacturing, and other than the June paper, this will be actually, I think, a more fair. I think if you can do the June one, you can do any manufacturing, because the June one was very complicated. Yeah, it was really a complicated one. So if you can do that one, you'll be sharp. So let me just quickly go through manufacturing. What you need to understand with manufacturing is, first of all, his expenses is divided into 3 departments: factory overheads, admin, sales and distribution. So certain expenses would be exclusive. So for instance, bad debts, packing material, advertising, those things is exclusive to sales and distribution. The salary of the secretary, the depreciation on the copy machine, all of those things exclusive to admin. Factory overheads, exclusive maintenance of the factory machines, this, and so forth and so forth. You get the picture. The thing comes in with the expenses. So in other words, before I go on. So in other words, admin will be a T account, sales and distribution would be a T account, factory overheads would be a T account. The admin, I'm going to put all the admin expenses in. You remember in grade 10 we closed expenses to profit and loss. So what's going to happen now is these expenses are going to be closed to admin. So in admin I'm going to have all my expenses, and that I'm going to close to profit and loss. Okay? Sales and distribution will be close to profit and loss. In other words, if I do an income statement where I have sales, cost of sales, gross profit, income, expenses, my operating expenses block and top will literally be only 2 expensive: admin, sales and distribution. Because that's going to be a total that we get from the T accounts, where they have summarized the expenses that goes to admin, the expenses that goes to sales and distribution. So when you do manufacturing, it's just as important to know what to leave out than it is to what is put in. So if they ask you to do factory overheads, and they give you info on advertising, it's just as important to know that does not go to factory overheads. Okay. Factory overheads, on the other hand, forms part of my work in process. I'm not going to close it to profit and loss, because factory overheads is in the end going to become part of the product that I'm making. Now if you remember the T for work in process, I have an opening balance and a closing balance. Then I have direct material, direct labor, factory overheads. Can you see my costs of making the product? Ne? Then I'm going to take that to my finished goods. And what is finished goods? This is the stuff that's ready to sell. Okay? So I want to bake a cake. Or I want to bake a bread. This is a good example. I want to bake a bread. Now you guys don't know this, but if you bake bread, the dough has to lie overnight, ne? So that it can rise. So I will have an opening balance because I already started this product. Now I need to add the direct material, the extra stuff that I'm putting in now into that bread, the labor, the factory overheads. Once this is done, I can take it to finished goods because now I can sell it. Okay. So finished goods would also have an opening and a closing, because finished goods is like my trading stock. Does that make sense to you? Finished goods is actually my trading stock. And my trading stock I don't buy from someone else. I made it. That's why I only got work in process here. I don't have bank creditors, cost of sales on the debit, whatever. I don't have all of those things. I can have cost of sales on the debit side. Don't let me lie to you. But I won't have my bank and creditors because I didn't buy the finished goods, I made it. I processed it. Okay? And then that difference there gives me cost of sales. You guys must remember this because sometimes they ask it. So the first thing, there's three expenses is classified in three parts. Okay. Factory overheads is the expenses that's going to be part of the product's cost price in the end. Does that make sense? Everybody's with me? Okay. So, what do they like to do? With manufacturing, they have two questions. They always split the question into two parts. The first part would be the direct material, direct labor, factory overheads, finished goods. They're going to either ask you the notes for it, or they're going to ask you the production cost statement. Okay, so this is literally figures and formats. So you must get full marks there. Okay? They can also be aware, they can also ask you an income statement, a shortened income statement. And usually the shortened income statement would literally be sales, cost of sales. Remember, you are able to calculate cost of sales. Gross profit, and usually they don't have income, they have operating expenses, admin, sales and distribution, operating profit. They usually only ask that part there. And now I say to you again, factory overheads is an expense. So in a factory overhead note, they can ask you absolutely every type of adjustment that you did in paper 1 for the income statement balance sheet. Okay, so make sure you know the 10% increase or decrease, the trading stock, no, not trading stock deficit, we can't do that one, but anything. So if I look at this also, in my factory overheads, I will look at my consumable stores. And consumable stores will be called indirect material. So when I look at manufacturing, manufacturing has direct material and indirect material. You're not going to understand my abbreviations if you don't pay attention. So direct material goes straight to the work in process. Indirect material, this is what I call raw material. Right? It's the same thing. So I want my raw material cost, in other words, the part that goes to the factory. Indirect material is my consumable stores. And it goes to factory overheads. So if I do a T for consumable stores, I will have an opening and a closing. That opening and closing, I'll find the info with the balances. Usually they give you the balances for the direct material, work in process, finished goods, consumable stores on hand. That's where I find that balances. Okay. Now, whatever I buy, whatever I return. And now, very important, whatever was used. Now, what was used, they can tell you. It all goes to the factory. Or they can tell you 2% goes to the factory, admin, sales and distribution. So always make sure about that. The other thing I need you to please remember is when you get to factory overheads, you will always first adjust then ratio. In other words, if you have water and electricity is 20 Rand, and they say the factory uses 80%, but they also give you an adjustment where they say 5 Rand still outstanding. So that's the adjustment. I will first say 20 plus 5 gives me 25. Then I will say times 80. Can you see I'm not going to 80 that 5 Rand. That's what a lot of you guys do. Another thing that they will do, that they like to do, is they will ask you, they will say, oh, you know what, the water and electricity is 20, I made a mistake. I ratioed it 2 to 1 to 1, but this is a wrong ratio. The right ratio is what? 4. Whatever. We just say 3 to 1 to 1. Whatever. Okay? So what are you going to do? You have to work back the ratio. So I can see this ratio's total is 4. This one is 5. Okay? So I'm going to take the 20. I'm going to reverse the wrong one. So what's the wrong one? The wrong one was 2 over 4. So it would be 4 over 2. The right one is going to be 3 over 5. And now I get the right one. They like doing that. They like in the production cost statement to ask you to calculate the cost of sales. You guys, listen to me when I'm saying this. If I look at the production cost statement, it's the direct material, the direct labor. That gives me prime cost. I cannot make a product if I don't have those two. Okay? Then, factory overheads. So what they like to do is in that factory overheads, they will give you, you remember the wrong net profit that we did in paper 1? They like to do factory overheads like that, where they say to you, oh, we calculated factory overheads, but we forgot to take the following adjustments into account, or we forgot, or we did wrong calculations when we divided it between admin and whatever. So that's what they like to do with that. So go look at exercises like that. Okay? Now when I get that, this is my total manufacturing cost. Meaning, this is the amount of goods that I finished making this year. Now I need to add work in process opening. Because if I do that, I have my what? Nothing. This is just a total. But now I want to subtract my work in process closing. Because this is my finished goods. This is the amount that I'm going to send. The cost of the goods that I finished making this year. If I go to finished goods, it's this one. Can you see it's not cost of sales? Don't get confused. This is now the stuff that I finished that is now ready to sell. Doesn't mean I sold everything. So, if they don't give you that, they can ask you in 2 different ways to give you that. Firstly, they can tell you, I produced so many units, and this was the cost of making it. Then I just times it. That's the easy way out. And then you reverse to get work in process closing. That's what they usually do. The other thing that they can do is they can give you the cost of sales. Let's say they didn't give you that. They gave you, they can give you the cost of sales, and then they give you finished goods, opening and closing. Now remember, finished goods, opening and closing is the goods I have available to sell that I didn't sell last year and what I didn't sell this year. It's also not that part that I want. You see? So now, what do? I go and I say, okay, how am I going to get my cost of sales? I do my finished goods, opening, closing, cost of sales. If they give me that, then I can calculate that working process. Okay. You guys sharp. So that's the first part of the question. And for that part, you have to try and get as many marks as possible, because this is where they really give the text. Then you get the second part. The second part of the question is usually your costs. So they're going to ask you something break-even point. They're going to ask you something about the direct labor cost, the direct material cost per unit. Ne? Why is this cost going up? Why is this cost going down? What must I? That's that type of question. Now, to comment on these days they like the new thing. So break-even point is my total fixed cost. In other words, my rand. The total rand over selling price per unit less variable cost per unit. Okay? Now, what do I do when I comment on break-even point? I go look. If they only give me the information for 1 year, they only give me 1 year's break-even, then you compare the break-even point with the production that you made. And you can say, oh, they made a profit or they made a loss. Okay? But in grade 12, they like to put up another notch. So they will give you 2 years. And they will give you 2 years production and break even. So now what you need to do is you need to see how much units are we making profit on or loss on. So now you're going to say year 1, break even so much, production so much, profit or loss on so many units. And you're going to do the same for year 2. You do the same. I'm not going to rewrite it. Both years you say, the break even was 10, the production was 12, we made profit on 2 units. Next year, the break even was 12, the production was 9, we're making a loss of 3 units. We're doing so they should not be happy because last year we made a profit and this year we make a loss. Or last year we made a loss, this year we make a profit, so they should be happy. Or last year's profit was 5 units, this year's profit is 7 units, so my profit is increasing, we should be happy. Can you see? This is when they move up the game. Okay. Another thing they like to do with break even now is they do not ask you to calculate the break-even point. They ask you, if we want to make an extra 100,000 profit, how many units, blah, 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 must we produce? Okay? This is a variation on break-even point. Because what do I know about break-even point? Let's say this was 200, this was 20, this was 16. Then it means that difference there is 4. And that 4 I call my contribution. And that contribution contributes to covering the fixed costs. Meaning, how many 4 rands am I going to need to cover the factory overheads? Oh, I'm going to need 50. Meaning, once I sell 50 units, my fixed costs is covered, and now the 4 rand with unit 51, I will make 4 rand profit. 52 units, 8 rand. 53 units, 12 rand. So forth. Okay. So now I'm going to use that principle. So if I'm already making a profit, it means that fixed cost is most now covered. So what am I going to do? I want to make 100,000 extra profit. With every product I sell, I've got a 4 rand contribution. Ne? Because I sell it for 20 rand, but the variables was 16. So I have 4 rand now to contribute. So now I will see, oh, I need to make what? How many units? 50,000 or whatever. 500 units. You guys can work it out yourself. But you do get what I'm saying. So they like to ask it this way. Okay? So, huh? What's the other way?
If they want to produce, they say 50 more units. What is the problem?
Oh, I thought you meant there's another way to do this. No, there's another way to ask the question, and the other way to ask the question is basically what we did here, where they tell you how much profit did we make if we on the 4 units. Is that what you're saying? So in other words, that 4 rand, if I make 4 units extra, would be 16 rand profit. Is that what you mean? Okay. No. Okay. Come, try again, Riz. They give you the number of units. Okay, but think about it because you're on air now, ne? Okay, so then the other thing, listen again. What is economics of scale? Economics of scale basically mean, the first thing you need to realize, total fixed cost is factory overheads and admin. Total variable cost is direct material, direct labor, sales and distribution. You have to know this, because when they ask you the break-even point, it's not a given that they're going to give you these ones straight. Okay? So if they don't give you fixed cost, if they give you fixed cost per unit, ne, then you know you're going to have to times it with the units to get this total, for instance. If they don't give you fixed cost, but they give you factory overheads and admin, you know those two together gives you fixed cost. So those things you need to know. But now, what is economics of scale? Important. Let's just quickly get the definitions again. Variable costs is influenced by, oh, and I don't know how to spell influence. Is it an A or an E? Influenced by units. So, I want to make, what do I want to make? I want to bake a cake. I need 3 eggs. If I want to bake 2, I need 6 eggs. 3, I need 9 eggs. So every unit determines how much the variable cost increases. Fixed cost is not determined by units. In other words, if I'm renting this building, ne, and it's COVID, and I'm not making anything because my people are not allowed to come to the factory, I'm still going to pay that rent. It doesn't mean that the rent is going to stay the same. It might still increase. That's not the definition of fixed cost. Let me repeat that. Fixed cost doesn't mean that things don't get more expensive. Fixed costs mean that it's not determined by the units. Okay. So in other words, if I say to you the fixed cost is 100 and the unit is 10, then the fixed cost is 10 rand per unit. If the fixed cost increases next year to 110 and my units stay 10, my fixed cost per unit is going to increase, which is quite possible because water and electricity is going up like crazy, the prices prices at this stage. Okay? So it's possible that that can happen. But if my fixed cost increases to 110, ne? But my units increases, and now I can't do the sum anymore. But my units, okay, let's say my fixed cost increased to 140, but my units increases to 70. Can you see now per unit it's only 2 rand? So what they like to do is they will tell you the total fixed cost is increasing. Why should he not be? Should he be concerned? Then you go look. if you work it out per unit, what's happening to the per unit. So in other words, what is economics of scale? It's the total increases, but the per unit decrease. And why is it that the per unit decreases? Because the units we are producing is decreasing. Okay? And then obviously they're going to ask you internal control measures, right? So internal control, go get 2 sentences for yourself. For direct material and for direct labor. Go get 2 sentences. Where you say, material, go talk about the supplier, go talk about wastage. And what's the solution? Change to a supplier closer. Don't import, rather buy local. Wastage, train your workers. Direct labor, once again I say to you, remember, direct labor is not about how much we pay the people. It's about their productivity. I'm going to give you the example again. I have 1 worker. I pay that worker 100 rand per day. If she produces 1 product, it means the direct labor cost per unit is 100 divided 1 is 100 rand. Okay? But now I send that worker for training, or I get better equipment. Nee? She doesn't have to use blunt scissors anymore. So I still got 1 worker. I pay her 100 rand a day, but now she makes 4 products. Nee? Now can you see my direct labor per unit is going to be 100 divided 4. It's going down to 25. Is it because I'm paying her less? Nee? No, it's about her being more productive. Okay? So can you also see, if the direct labor cost increases, it's not because I'm employing more people. Okay? When the direct labor cost per unit decreases, it's not because I fired people. Okay? It can be, maybe, because there is a salary increase. Nee? Because if I now pay her, say 200 rand, nee, then the per unit is going to increase. Okay? But please guys, it's not because I'm employing more or less people. Okay. Let me see. Then also, like with inventory, they can bring in wastage. Now, please go look at your wastage. They are divided into wastage in the raw material, né? And wastage in the work in process. Okay? Not wastage. Wastage will go with work in process. But with raw material, it could be stuff that gets lost or missing. So just see where it is. So if it's raw material that's going missing, it could be something that's wrong with your internal control in the storage room. Your security, get a manager, store manager, get a storage manager, get search the workers, blah, blah, blah. Work in process can be stuff that's stolen also, but most of the time it will be stuff that's wasted. Okay? So just look at the difference. So stolen goes with any kinds of stock. So this can even go with finished goods that get stolen. Okay? Work in process can get stolen also, but wastage is a better question. So they will tell you what you're supposed to use and then what you did use. So in other words, they're going to say, oh, to make 1 tracksuit takes 2 meters of material. We have issued, we have made 7 tracksuits, which means we should have used 14 meters. Then I go, look, what is my raw material cost? My raw material cost is 20. Now I can see, 6 was wasted. You guys, and why is it wasted? Number one, the material is not of good quality. So we make the sweatsuit and it rips the whole time, so we have to remake it, so we use new material. Or because my workers is not productive, they have lunches every 2 minutes, there's load shedding, anything like that, so it means I need to pay overtime, which is more expensive. It could also be that my workers are wasting unnecessarily because they are not trained. Okay, so go look at those things. Do you want me to do the question itself, or are you fine with this summary? I think this summary was a good one for you guys. Next.